Welcome back to Market on Close. It's time for Options Corner. Kevin Green is here with his big batch of charts to finish the week. So, Kevin, we were looking for a little bit of excitement, maybe a catalyst for this market because it was pretty sluggish to start the day, and we got it. Unfortunately, though, it's resulted in some red arrows. So S&P 500 down about 1% right now with less than a half hour to go into the close. What levels are you watching specifically over the next half hour?
Yeah, so going into the close, we want to really try to hold, or maybe we even touch 6,008. That's going to be the 20-day moving average. And if we do kind of touch that level, maybe we get some buyers to really step in. If not, 6,000 could actually be a little bit of pen risk for the market here today. What's actually very interesting, we actually hit that 6,100 on an intraday basis. I got very close to it. Actually, we did cross that line there for a little bit there. And then we saw that fade. So keeping this overall channel intact here on the longer term time frame, but going into the close, obviously, once again, looking at 60.30, we really wanted that to hold. We're kind of below that right now, 6,000. We do have some pen risk. If we do get some form of a bounce, we need to start reclaiming some of these intraday highs, if you will, right? So hitting 60.35 first. The next area that you're going to be looking for is 60.56. We might get a little bit of a ramp, but one thing just to kind of note, Caroline, since the Trump administration, each Friday, we've actually had red days, right? Each Friday, we've also had the VIX kind of pop to the upside. That's why the chart that we actually see on the longer term time frame looks the way that it does. So you also have to kind of keep in mind there may be some de-risking happening going into the weekend because there is so much uncertainty, which is kind of creating this cycle behavior with the market so far here. So the chances of a ramp, anything's possible, but it just has not been the case the last 2 weeks on Fridays. We've seen a small bounce, but nothing that would be 30 points or 40 points back to the upside.
Yeah, and President Trump already preparing us for what could be a volatile week ahead because he said that reciprocal tariffs are coming next week. So I think there's already probably some jitters about that. So I don't know if you have another S&P 500 chart that you want to home in on, but just as we think about volatility as well, what should we be thinking in terms of the VIX?
Yeah, I mean, once again, VIX, I continue to say this, it's actually relatively low. Saw a little bit of a bump to the upside here today, but we actually had a 14 handle for the VIX earlier this morning, which once again is relatively fairly low. Now, next week, there's not a lot on the calendar to really kind of shake us up when it comes to economic data. We have a lot of commentary coming from the Fed. So usually if you're looking at a seasonality type of chart, next week generally is kind of like a lull type of week when it comes to volatility. Now, obviously, we have a lot that's going on with the new administration, a lot of news items hitting the wire. So that could create a little bit more volatility. But usually we actually see a little bit of a ramp up the last week going into March when it comes to volatility. So right now, I would say we're kind of on trend, but on a relative basis, we're not even really pricing in. Well, we are now, but earlier this morning, we weren't even pricing in a 0.8% implied move on a daily basis, which once again is low given the environment that we're in right now.
Okay. All right. Yeah. S&P down a little less than 1% right now, but still only 1.6% away from the highs. I know you're also tracking market liquidity. What are you seeing there, Kevin?
Yeah, so we have seen liquidity to start the week was obviously a little bit low, and then we started seeing it kind of widen out there a little bit. Yesterday, we did see a little bit of contraction. So we have a low liquidity type of market. It really doesn't take much to really move prices either to the upside or downside, which also could be the reason why we had that stellar close yesterday. Today, if you're just kind of eyeballing it, it does appear that liquidity is kind of coming in a little bit more, basically contracting, and rightfully so. We do have a down day here. Maybe a little bit of volatility is also leading to that. But what we do not want to see over the next 2 or 3 trading sessions is that liquidity bar or this band kind of squeezing a little bit more on a day-by-day basis. That would actually give me a little bit of caution here. But once again, when you're looking at the longer-term time frame, we're still bullish for now. We're still holding some key areas. Hopefully, we actually do see, maybe we see a bounce at 6,000 or get close to 6,000 and see a bounce and then try to move to the upside. And that will kind of complete this whole wave that we've seen for the last 3 weeks where we've had nice little pops, but then we have gap downs on Mondays and then trying to just recover pretty much every day until Friday. And then that's usually when we see another fail to the downside, unfortunately.
All right. We have about 24 minutes to go before the closing bell. And we'll be sure to, we'll be checking in with you in about, 23 minutes and 16 seconds. So, Kevin, we'll talk to you soon.